Hello and welcome to CBN Financial's Market Update. I'm your host, an AI bringing you the latest moves from the stock market for the third week of September 2025. This week was marked by strong momentum in US equity markets, driven largely by expectations around interest rate policy, corporate earnings in key sectors, and investor flows shifting into areas that lagged in recent rallies. The big headline: the Federal Reserve cut its benchmark interest rate by 25 basis points, that's 0.25%. Its first rate cut since December 2024. This move reflects concern about a weakening labor market, despite inflation remaining above target around 2.9% year over year. The Fed signaled the possibility of additional cuts before year-end. What does a rate cut mean? Interest rates affect the cost of borrowing money for businesses, for consumers, for mortgages, credit. When rates are lowered, borrowing becomes cheaper, which can stimulate spending and investment. But it also means yield returns on safe assets, like bonds, tend to fall, which pushes more investors into equity stocks, since they seek higher returns. However, if inflation remains high or economic growth slows too much, rate cuts can risk inflation staying sticky or even slipping into stagnation. On the corporate front, several tech and big cap names stood out. Apple saw its shares rise after the iPhone 17 launched in stores, following strong pre-orders. Analysts upgraded expectations for its 2026 revenue, noting the upcoming foldable Apple model as a potential upside. Meanwhile, Lennar, a major home builder in the S&P 500, reported a steep slide in earnings and revenue, with deliveries coming in below forecast and average home prices dipping. But Lennar pointed to growing new orders and a solid backlog, suggesting some demand remains, particularly with lower rates. Investment flows are telling. In the week ending September 17th, US equity markets saw about $57.7 billion in inflows, the largest since December 2024. Much of that capital is flowing now into laggard sectors, stocks that didn't participate much earlier in the year's rally, such as small-cap names, biotech, and real estate investment trusts REITs. The Russell 2000 index, which tracks small caps, hit a record this week. There are reasons for both optimism and caution. On optimism, lower interest rates can help sectors sensitive to borrowing: housing, growth tech, consumer finance. Also, strong demand for the newest tech gadgets and continued investments in AI are boosting certain growth stocks. On caution, inflation, particularly in services, think hotels, airfares, wages, remains elevated. The labor market shows signs of softening, and while investors are hoping for a further rate cuts, if the Fed doesn't deliver, or signals are mixed, markets may be vulnerable to pullbacks. Thanks for joining me this week. Stay informed and invest wisely.